From a billion-dollar dream to a turbulent downfall, Virgin Galactic's journey is nothing short of a roller coaster. Imagine investing in a company that promises space travel for everyone, only to watch its stock plummet. What went wrong with Virgin Galactic? Stay tuned as we uncover the rise and fall of this once promising business. Virgin Galactic, founded by the charismatic Richard Branson, burst onto the scene with a bold vision, making space tourism a reality. With Branson's star power and a dream of democratizing space travel, the company quickly captured the imagination of investors and the public alike. The initial hype around Virgin Galactic was palpable, as people believed they were witnessing the dawn of a new era in space exploration. Investors flocked to buy shares, hoping to get in on the ground floor of what seemed like an inevitable revolution. The media buzzed with excitement, and the company enjoyed a meteoric rise in its early days. Virgin Galactic's promise to take ordinary people to the edge of space was a tantalizing prospect that fueled the frenzy. The excitement peaked when Virgin Galactic went public in 2019 through a merger with a special purpose acquisition company, SPAC. This move allowed everyday investors to get a piece of the action, and the stock soared. At its peak, Virgin Galactic's market valuation surpassed $12 billion, with eager investors hoping to see the company revolutionize space travel and reap massive rewards. The allure of commercial space travel was strong, attracting not just retail investors, but also institutional ones, all eager to be part of what seemed like the next giant leap for humanity. Enthusiasts envisioned a future where space tourism was as common as air travel, pushing the stock to dizzying heights. However, the reality of building a commercial space travel company proved far more challenging than anticipated. Technical difficulties, delays in test flights, and safety concerns began to overshadow the initial excitement. The company's flagship spacecraft, VSS Unity, faced numerous setbacks, including a tragic accident in 2014 that resulted in the death of a test pilot. These incidents shook investor confidence and cast a shadow over Virgin Galactic's ambitious plans, leading to significant financial losses. The company's vision of routine space travel seemed increasingly distant as they grappled with these persistent obstacles. As the company struggled to meet its timelines, the stock started to wobble. Investors who had bought into the hype began to grow impatient, questioning their initial optimism. Each delay and technical hiccup chipped away at the stock price, leading to increasing skepticism about whether Virgin Galactic could ever deliver on its promises. The stock's volatility became a source of concern for even the most optimistic shareholders, who started to reconsider their long-term investment strategies. The growing uncertainty cast a shadow over the company's future prospects. Adding to the pressure, competition in the commercial space sector intensified. Companies like SpaceX, led by Elon Musk, and Blue Origin, founded by Jeff Bezos, made significant strides in their own space exploration efforts. These companies not only had deep pockets but also demonstrated consistent progress and successful missions, making Virgin Galactic struggles even more glaring in comparison. As SpaceX and Blue Origin captured headlines with their groundbreaking achievements, Virgin Galactic's setbacks seemed to amplify. The growing success of its rivals underscored the challenges Virgin Galactic faced in maintaining investor confidence and public interest. Despite the setbacks, Richard Branson remained a steadfast believer in Virgin Galactic's vision. In July 2021, he took a high-profile trip to the edge of space aboard VSS Unity, marking a significant milestone for the company. This moment was meant to reignite investor confidence and showcase the potential of commercial space travel. However, the celebration was short-lived as the stock experienced only a temporary boost before resuming its downward trajectory. Investor enthusiasm waned as challenges in regulatory approvals and technological hurdles continued to cast a shadow over the company's ambitious plans. Financially, Virgin Galactic continued to burn through cash at an alarming rate. The costs associated with developing and testing spacecraft, combined with the lack of revenue from commercial flights, created a precarious financial situation. Quarterly reports painted a grim picture, with mounting losses and dwindling cash reserves. This financial strain added to the growing doubts about the company's viability, as investors started to question the sustainability of their business model. The mounting pressure made it increasingly challenging for Virgin Galactic to secure additional funding, which further exacerbated their financial woes. The broader market conditions also played a role in Virgin Galactic's stock crash. As the initial excitement around SPACs faded and the market became more discerning, speculative stocks like Virgin Galactic faced increased scrutiny. Investors began to demand more tangible results and clearer paths to profitability, something Virgin Galactic struggled to provide amidst its ongoing challenges. Moreover, regulatory scrutiny over space tourism and safety concerns added to the pressures. These factors combined to erode investor confidence, contributing significantly to Virgin Galactic's turbulent stock performance during this period. Public perception of the company also took a hit. Once seen as a pioneer and a beacon of innovation, Virgin Galactic became a cautionary tale of overpromising and underdelivering. Media coverage shifted from celebrating the company's lofty ambitions to scrutinizing its failures and delays. This negative sentiment further eroded investor trust and contributed to the stock's decline. In an attempt to stabilize the situation, Virgin Galactic's leadership implemented several strategic changes. They revised their timelines, restructured their operations, and sought additional funding to keep the company afloat. However, these efforts often felt like damage control rather than a clear path to recovery. Investors remained wary, and the stock continued to languish. Looking ahead, the future of Virgin Galactic remains uncertain. While the dream of commercial space travel is still alive, the road to realizing that dream is fraught with challenges. The company needs to prove that it can deliver safe, reliable, and profitable space flights. Until then, the stock is likely to remain volatile and investor confidence fragile. For those who believed in Virgin Galactic's vision, the journey has been a painful lesson in the risks of investing in highly speculative ventures. The company's story serves as a reminder that even the most exciting and ambitious ideas can face significant hurdles. As the commercial space race continues, only time will tell if Virgin Galactic can overcome its obstacles and reclaim its position as a leader in the industry. If you found this deep dive into Virgin Galactic's rise and fall fascinating, don't forget to hit the like button. Share your thoughts in the comments below. Do you think Virgin Galactic can bounce back, or is it doomed to fail? And make sure to subscribe to our channel for more in-depth analyses of the biggest stories in business and technology. Thanks for watching.